Welcome back to another episode of FPOG, Financial Planning for Oil and Gas Professionals. This week on the podcast, we have a guest, Terry Nixon. Terry is actually my neighbor here in Fort Worth, and Terry has spent the past 4 or 5 decades building an incredible career in oil and gas. And a couple of months ago, Terry and I were walking the Charles Schwab Challenge, so a PGA tournament event here in Fort Worth. We were walking the course, talking to golfers, and Terry was just telling me the story of his entire career and how it intersects with different industry giants, different publicly traded companies that we all know today. And so I immediately thought, we have to have Terry on the podcast. And I want our listeners to be able to hear his story. And I would almost label this the making of modern day Texas oil and gas. And so Terry Nixon, welcome to the show. We're excited to have you.
Thanks, Justin. Appreciate it very much.
Absolutely. I think it'd be helpful, first of all, Terry, if you could just give our listeners a brief overview of what your oil and gas career looked like and what is kind of the scope of your work. What does that look like over the past 40, 50 years?
Well, initially out of college, my first job was with Northern Natural Gas in Tulsa, and it was in the gas purchase department. So I was basically a gopher for gas buyers. And I did that for about 2.5 years, which as a result of being a member of various associations and a boss that included me in lunches and so on and so forth, I was able to meet a number of folks in the midstream side of the business. And so I received a job offer from Houston with Lone Star Gas. And so I moved from Tulsa, and that was, in 1973. And I was with Lone Star, which was an intrastate pipeline, with Lone Star for a couple of years, and then went to work. Got another job offer with another promotion to like a senior gas buyer from Tennessee Gas Pipeline, which interstate pipeline. And there again was offered many opportunities to meet various people as it on the upstream side. Since we were midstream, those were our customers. One of which was a guy by the name of Chester Clute, and his name comes up here again pretty soon. But I was instrumental in helping get them some risk dollars when he was with Tesoro for drilling oil and gas exploration wells. And so that led to us playing some golf together and becoming buddies. And then time passes on. He leaves Tesoro. He comes back to Houston, and he's with Florida Gas Exploration, and he was hired as their manager of gas sales. So there again, I worked with him again at Tennessee. But over time, 1979 starts rolling around, and the Natural Gas Policy Act of 1979 that came up. And this was something that was going to cause producers to kind of be more on top of the regulatory environment within their business and their filings and the prices they could receive based upon their distance of wells from each other and lots of various things. And so both of us were getting offers from independent oil and gas companies to come in and help with that. In the meantime, he had moved in the same neighborhood that I lived in, and we were out near, Bear Creek Park, Katy, out that way. And we were carpooling together, and we were having an hour meeting going in and an hour meeting coming home, in essence, that led to the formation of, hey, we can do this ourselves, and let's form a consulting company that we called initially, it was Tulsan Energy. I'm from Tulsa, he's from Houston. Combine the two and you get Tulsan. And we had initially 2 clients, Clover Energy and Geodyne Resources. And then within about 6 months, we picked up a company called Endevco, which was certainly a midstream company But for Geodyne and for Clover Energy, crude oil was still regulated at the lease, but the refined products were not regulated. And so Chester had been experimenting with this idea at Florida gas exploration. And we decided to offer this to our two clients that we will file to become, we don't have any assets as it relates to a refinery, but there are tea kettle type refineries out there that have extra capacity. And let's file to be a refinery, and then we'll buy capacity from these refineries. And that led to us entering into an agreement with our clients that anything we could produce beyond the lease level, we got 20% of. And that turned out to be a huge home run because we were turning a $15 barrel of oil into a $45 barrel of oil. And that meant that Chester and I were getting 20% of $30 per barrel. And each of these clients had roughly 1,000 barrels a day, which led to us having a very strong first year and a year and a half. And we did that until, just so happens, it was the Reagan administration that deregulated crude, which was great for the producer, not so good for our little niche. But anyway, it worked. And in the meantime, we had developed another client in the midstream space called Endevco. And it was started by Jim Bryant and Dale Singleton, became prominent names in that midstream space. And so we were to be their business development arm in Houston. And anyway, we worked on gathering deals, processing deals, treating deals, and we did several. And because of that first year, we were fortunate enough to put back some money that we didn't spend. And we continued to live on what we were making, which was like $25,000 a year at our previous jobs. And so that money allowed us to take pieces of deals beyond what we earned, and they allowed us to take up to half, although we never took that much, but we did take a quarter. They asked Chester and I to come up, and they had just hired a new guy to do business development, a young engineer from Lone Star. And so we were there and we were talking for a while. And pretty soon they said, "We want you to come in here and meet our new employee. He's in the map room working on ChartPack with using ChartPack on the map." And he was standing up on a chair when we walked in, and they said, "Hey, Kelsey, we want you to meet Terry and Chester. They represent us down there." And that turned out to be Kelsey Warren. And which, in addition to that, when I was at Tennessee Gas, which I failed to mention, another guy that became very prominent in our business, Bob Phillips, which we'll talk about later. But Phillips formed his own company out when I left Tennessee. I think Bob left roughly the same time. He formed a company called the Eastex. And while I was at Tennessee Gas, another client at Arco I had was a young engineer by the name of Jack Layfield. Jack Layfield went on to become the founder of Cayman Energy, which killed him. And all of these guys are still very good friends of mine. And also, in addition to that, I'm giving you this background just to show you the people that I kind of grew up in the business with. Steve Bergstrom, who's now the chairman of the board of the Williams Companies, worked hand in hand with, I guess he came on a little bit later of the founding of the Natural Gas Clearinghouse, which Chuck Watson basically put together. And Chester and I were friends with Chuck. Not to the extent that I like working with Bob Phillips or working with Kelsey, but we were certainly familiar with Chuck. And then he later brought in Bergstrom. But anyway, it was just these kinds of things that led to Chester and I ultimately developing a company called Transstate Gas Service Company, which was a midstream company. And again, another group, men that we had worked with were the founders of Midcoast Energy, Steve Herbst, Kenneth Holmes, Dan Tutcher. And those guys developed Midcoast, which they later sold to Enbridge. And that was back in roughly 2000, 2001, something like that. And that became Enbridge's lower 48 natural gas footprint. Heretofore, they had been predominantly a liquids trading company, and almost not all, but the significant majority of their efforts were in Canada. And so anyway, Steve had done that deal. And when we started talking about Transstate, he offered. He said, look, I'd like to do that deal with you. You guys do the work. We'll take half of the company and we'll be your balance sheet. And that was in order to do, quote unquote, marketing. When I first got in the business, the gas, we were afraid that we were running out of natural gas. I mean, it was starting to get scary. And so the interstates were buying gas by throwing the kitchen sink and everything else at the producer. 20-year contracts that they agreed to go up annually every year, and they had take or pays in them for 60 or 70%, meaning if you didn't take it, you pay for it for the term of the contract. Well, with that in mind, the producers really got busy and they started drilling. And so that led to a situation for the pipeline companies that was very, for the most part, traumatic. And that was that they couldn't take the gas, they couldn't take all, but they were required by contract to pay for it. And so what that led to is the pipelines coming to the producer with their hat in their hand saying, well, we're either going to fail or we'll agree to release you from the contract. We'll provide you transportation and you go out and find someplace to sell it. And so most of the producers, almost all, I'm sure, 95% took that. And that opened up an opportunity to do marketing, if you will, of third parties. The pipelines before had always been common carriers, but they never acted like it. But it was in their best interest. They could get some revenue to move the gas. And so they started offering transportation agreements. And it just so happens, to give you an idea of kind of where we got into this, that Chester and I filed for a transportation agreement with Natural Gas Pipeline. It was their number one transportation agreement, and which meant that we had priority for transportation on this huge interstate pipeline. And we did that obviously on many of the others. But what in essence happened was, when we initially first started doing this predated Enron, that we could make anywhere from 50 cents to $1 per MCF for buying it, having it transported, and moving it to an end user, not a utility, would go around the utilities. And so anyway, that led to us, that company growing. We hired people in the North Midwest, Michigan, Wisconsin, to do. We hired a couple of gas sales engineers. Jeff Clark, one, a gas sales from another, and they took a little risk in that they were with utility companies. They took less money, but we offered them pieces of Transstate to come on board. Chester and I did the supply side. And so our company grew and established a name. And so and initially, this is crazy, but the accounting companies of the of the exploration companies and or even the midstream companies hadn't come to grip with how much gas a couple of knuckleheads like Chester and Terry were buying and the risk associated with that if we defaulted. So we were moving 100 million a day to SoCal, and with totally depending on SoCal to pay us. So when the accounting groups in these various companies woke up, they went, "Oh, whoa, what are we doing here?" And they basically started to require letters of credit, which was really eating up the money behind us, how much of their reserves and their assets they were having to commit to support Transstate. So they began to look for opportunities to see if anyone was interested in us. So lo and behold, Jack Layfield then at the time was backed by a company called Triumph, and they bought us. And then they also bought some midstream assets called Texline from Herbst and Kenneth Holmes, his partners. And then Chester and I signed 3-year contracts to stay on board to help make that work. Another way of developing that relationship with Jack Layfield. And in the which I didn't really address is going back to the Endevco days, we became quite close to Kelsey because we were basically doing the same thing for Endevco. We were developing a gathering business, a transportation business, treating, processing, and all together. And so anyway, that kind of all came together, and then we sold. We honored our 3-year contract to Layfield's group, and then they later sold to NIPSCO. So our little company went to Northern Illinois Public Service Company, and anyway, that left kind of Chester and I at that time. We kind of started doing our own kind of things, some E&P, some one-off gathering deals. But it led to a couple of things, and I can't say they were our best decisions, maybe our worst. But at one time, about the time that Dynegy was formed, Chuck Watson came to Chester and I and asked if we'd be interested in handling their marketing there in Houston. And, we were just, we kind of liked being independent. And so at the time, the clearinghouse was, most people hadn't even heard of them other than, I'm trying to think of who backed, and Morgan Stanley, I think, was the group that backed them. But anyway, and it wasn't much later after that I got a call from Kelsey, and Kelsey had what had happened in the previous couple of years, I guess, is that Endevco had gotten into trouble and had gone into, I guess, Chapter 11. And so Kelsey had left, and he developed a relationship with Ray Davis, and Ray had a partner, and for the life of me, I can't think of his name. But I'm pretty sure that shortly after they formed their partnership, Ray's partner passed away. But anyway, Kelsey and Ray came back and made a deal with not Endevco, but the group that was in receivership with them. And they bought Endevco out of receivership, changed the name to Cornerstone, and gangbusters. I think in about a year and a half, they had taken those assets and put them together with other assets that they had brought to the table and were working on, and sold to, let's see, El Paso Field Services, which was now headed up by Bob Phillips, Bob Phillips had sold East Tex to El Paso Field Services. So they made him the president, if you will, of El Paso Field Services. El Paso Field Services bought Cornerstone, and it was Kelsey's first lick. He even describes it. These are just round numbers, but he didn't have any money when they did. Ray was the money and Ray's partner, but Kelsey, because of his carried position, ended up with about 13 million, like a year and a half later.
Oh my.
I know.
And this is in the period of a year and a half.
They hit it out of the park.
Terry, quick question for you. Was the first venture that Kelsey Warren and Ray Davis did together, or were they previously partners in anything else?
To my knowledge, Cornerstone was the first time. Now, you can't take that to the bank, but I didn't know of anything else.
Quick call out for our listeners. Ray Davis is currently the owner of the Texas Rangers. Kelsey Warren is the largest shareholder of Energy Transfer. And so we're really getting into the origin story of the just incredible company today that is Energy Transfer. And so, Terry, I'll give it back to you. Would love to hear more about kind of the genesis and formation of Energy Transfer and what from there.
When they formed, after selling Cornerstone, they had to sign roughly a year's non-compete with El Paso Field Services, they being Kelsey and Ray. And about the time that wrapped up, they came together and they formed a brand new company. And I'm guessing, but roughly in the late 90s, 97, 98, 99, like that. And they called it Energy Transfer. And Kelsey gave me a call and said, "Hey, would you and Chester come up? Would like to visit with you." So we went up there, and business-wise, this was not a good move. But Kelsey offered us the marketing to come on board, be part of Energy Transfer, and you guys could have the marketing of Energy Transfer. And, we kind of talked about it, and we had grown so comfortable with being our own deal that, we thanked him, but that's probably not what we really want to do. And anyway, that he later, and I'm sure he may have talked to others in addition to the gentleman I'm about to tell you. Well, I don't know that. I do. I know of one for sure that he did talk to. And they, to their chagrin, said no as well. But anyway, he offered it to John Nolan. And John accepted it. And John had a pretty good reputation for being a go-getter. And so he came on board. Kind of a long story short, he was there for the most part throughout the entire growth, with all the kind of stock options you can imagine. And he and Kelsey actually became, I want to say, best friends. And I'm not saying that, Chester and I would have had the same success as John, because John did a really great job. And so the two of them together, plus all of the various people that they hired, you fast forward and you see where Energy Transfer is today. Now, if you go back a little bit further, i.e., let's call it 2002, something like that, by then I'm still involved with Steve Herbst, and at that time now, we're looking for little oil and gas drilling deals to take little positions in. So we came up to Dallas. He came up from Corpus. We came up to Dallas to look at a deal. And afterwards I said, "Hey, let's go by and visit Kelsey, see how they're doing." They were in what was called the fraternity house, which if you check that out, there's a story behind all that. It looked like a frat house anyway. and let's just go by and say hello. And Herbst, he had met Kelsey, but he didn't really know him. Nothing, like I did, because Kelsey and I were friends. And so we just stopped in and, told the lady out front, no appointment. We just kind of wanted to visit with Kelsey. And Kelsey immediately invited us in. And it was during that conversation that he told us about an acquisition that they were planning to do of Aquila. Aquila, a significant midstream company at the time, a $300 million company. And in hindsight, Kelsey since told me that Energy Transfer was about a $30 million company at that time. And Kelsey said, we're going to acquire them. We've made a deal to acquire them. And I'm going, what? A $300 million company? How are you doing that? And he said, well, they had formed a relationship with Natural Gas Partners, which, to be perfectly honest, was my first real education to private equity. And Natural Gas Partners told Kelsey that they'd put up 200 million, but you need to come up with 100 million from friends and family. And I immediately said, Kelsey, we want some of that. And he said, man, it's already placed. And I said, come on, you're kidding. And he said, no, it's already done. And I said, Kelsey, I mean, boy, we really would like to have a little bit of that. And Kelsey obviously knew Herbst's success in the midstream and his exposure, the people he knows and so on and so forth. And so Kelsey said, and I kind of got in trouble a little bit for this. Kelsey said, well, if I could get somebody to back off, how much would you want? And without even, because I was basically spending Herbst's money. It wasn't my money.
Yeah.
I said a couple of million. And he said, well, I'll see what I can do. But let me tell you something. If I give you a phone call and I tell you what it is, you have to tell me within a couple hours. The money has to be.
You better have a wire ready to go.
Absolutely.
Yeah.
And so when we walked out, Herbst grabbed me by the neck almost and said, Nixon, you're spending my money awful easily. And I said, well, wait a minute. You're just going to have, there was nothing to evaluate. I understand. I said, you're just going to have to trust me on this. And he's rolling his eyes. Yeah, hello, trust. But anyway, Kelsey called me the next morning and said, Terry, I couldn't come up with what you asked for. But he said, I did get a little baby share and it's 500,000. But I got to know, it was like 9:00. He says, you have to call me back by noon and have wired the money. And I said, I understand. And so to further add to this story, I had committed, kind of what I was going to take and knew in Herbst, I thought they would take it all. And they blinked. And so the total that they said they'd be willing to do was 375. And they looked at me and said, or phoned me, you can take what you want of it. And I blinked because they blinked and I cut mine in half, just arbitrary. And so anyway, I went back to Kelsey with what we would do. And he said, okay, consider it done. And we sent the money off. Well, it turns out to be the best deal Herbst says it's certainly the best deal I've ever done. I just wish I wouldn't have cut it in half. Yes. But it's today, and neither one of us has sold a share. And today, if you count distributions as well as equity interest, it's better than 100x.
That's unbelievable.
That's a nice investment.
That is a very incredible investment. So being able to go back in time and effectively invest in Energy Transfer almost at the genesis, what an unbelievable opportunity.
Yeah, no, it was. And I won't go on much longer with this, but within 1 year, Kelsey calls and says, well, we've got some distributions to make. and I got 150% of my initial investment in year one.
That's incredible.
Yeah, that's when you pat yourself on the back for, and think, I really did well, but I'm also kicking myself in the where, because we didn't accept the marketing of this, what's turning out to be a giant.
Yeah, that's incredible. I almost feel like I need to give a disclaimer because in this podcast, we have time and time again just really hit on the fundamentals of investing, of broad diversification, having global exposure, having a low cost within your portfolio. And then you hear stories of a really significant investment in one company, 100xing or more. And it just makes you want to throw all of those investment rules out the table.
Well, hey, we had the knowledge that we had was, I had worked with Kelsey for a long time. Then I saw what he did with Cornerstone in a year and a half. Unbelievable. And it was his partner, Ray and Davis, and very, very qualified himself and of substantial means by then. And so, of course, then they took it and, went crazy with it. And now, by the way, they acquired, I'm sure a lot of your folks are probably aware of this. 8 months ago, something like that, they acquired Crestwood, which Bob Phillips later founded. And so if you think back, it was Kelsey that sold Cornerstone to Bob Phillips at El Paso Field Services. And now it's Bob Phillips selling Crestwood to Kelsey and Ray at Energy, or Ray's gone, but Kelsey at Energy Transfer. So it's interesting how these things work. And a little background on Bob: after he was at El Paso Field Services, made president, they sold El Paso Field Services to Enterprise. And I don't remember how long it was after they acquired El Paso Field Services, but Bob became president and CEO of Enterprise before he left that and went and founded Crestwood. So his story is crazy too.
And quick note on that. So, about 8 months ago, Crestwood Equity Partners sold to Energy Transfer. I believe the number was $7.1 billion. Bob Phillips, who you referenced, is planning to be on the podcast here in the next week or two. So look forward to hearing more of the experience and that path.
Very successful.
Terry, I'm interested to hear from you. You were kind of there at the origins of Dynegy, of Energy Transfer, of Crestwood Equity Partners, and just so many of today's giants.
Jack Layfield, another one.
Yeah, absolutely. Was there anything that you saw, 30, 40 years ago, and maybe it's Kelsey Warren or any of these other, kind of oil and gas billionaire giants? Was there anything that you saw that was really unique 30 years ago that made you say, well, yeah, I'm not surprised that they're engaging in these, multi-billion-dollar deals?
Yes. Yeah, because even when we were working together and we were significantly below the C-suite, they were aggressive. They were extremely likable. They were creative. If there is something, I guess, that is surprising, but I think each circumstance is different. I didn't necessarily think of them being crazy, risky types. More just like all the rest of us, concerned about risk and somewhat risk averse. But I think that in each case, not unlike what Chester and I did, our situation certainly did not do what theirs did, but we had been offering jobs because of kind of the explosion within our industry from a regulatory standpoint. And so our attitude was, if we fail, we'll be all right. We'll be all right because we can go get another job in this space. And every one of these guys that I'm talking about, I guarantee you, had it not worked, they would have had no problem in getting another job that was significant.
Absolutely. Absolutely. I am interested to kind of ask you some questions about your business and reflecting back on that. Um, you said something that really struck me, and that was Kelsey Warren offers you, a pretty substantial position early on in Energy Transfer. And you effectively say, and tell me if I'm wrong, but something kind of similar maybe happened with Dynegy as well.
Not quite, not to that extent, Justin. Again, Chester and I didn't know Chuck like I knew Kelsey. I mean, coming from Kelsey, that was akin to, almost like a brother. I mean, I wouldn't quite go that far, but we had done, gosh, we'd done hunting and fishing and snow skiing and, on boondoggles, a bunch together, let alone work together. And see, Chester and I never worked with Chuck, or for that matter, I knew of Steve Bergstrom. He worked at Northern, but I didn't really work with him.
That makes sense. And I am interested to hear a little bit more about, you mentioned that it's a compelling offer when Kelsey makes that offer to you in Chester, but you had been on your own for a while. And essentially you kind of come to the conclusion that, hey, we love our life that we've built here with the independence. At what point did you kind of taste the independence of having your own business, doing your own venture? And at what point did you come to the conclusion that, hey, I'm never going to be able to go just work at a major and go to their office every day?
Justin, within 6 months, that's how fast it happened. We were very blessed, very fortunate to have been able to go out. We went out and got a legal opinion as it related to us setting ourselves up as a refinery, and they blessed it. And so the numbers are so different, obviously, now. This was in 1979. And Chester and I both, round numbers, made about $25,000 a year at our jobs. And we went, because of that situation where we got 20% of what we created beyond the lease, all of a sudden now we're making, the two of us together, over 100 to 150,000 a month. So it just skyrocketed. And so, but yet we were both smart enough. It was kind of like, if it's too good to be true, it's probably not true. So we kept it and we continued. I think we upped our salaries by $5,000 a year that year. So we had put that money back, and that allowed us to start being an owner, investor, if you will, into midstream assets. And, once we got like that, probably some of it is a little bit of just being naive, but we were patting ourselves on the back and thinking, I could never go back to, the corporate world with meeting after meeting. And when this is, and what you have to understand, and anybody that's ever been an entrepreneur, it's very personal. The ups and downs are significantly greater than if you're working for a large company.
It really is incredible. The highs, there's nothing like the highs. And then the lows, it's kind of funny. The lows are so low, and the highs and lows can be, 12 hours apart. And you have to learn to almost not extrapolate your current feeling.
Yes. We talked to Chester. I used to talk about that. We have to do our best to try to stay on an even keel.
Yeah. When something good happens, especially in that first year or two, the high is so great. You can easily extrapolate it and just think, I'm gonna own the entire world here in about 4 years. Nothing wrong will ever go again.
There was one other aspect that has to do with more feel good than anything. And that's that when we did this, like I said, we were one of the first, and it was just a matter of a few weeks. It had instant credibility as it related to who we could call and who would return our calls and how we were treated when we went to the natural gas men of Oklahoma or the natural gas men of Houston, those conferences. And it was a feel good thing. I mean, I'm no denying it.
And it is interesting. I would love to hear, Terry, what were some of the low points? And you mentioned some of them, some regulatory changes, but tell us about what were you feeling? What were you and Chester feeling going from, hey, 150,000 a month, which is just an enormous amount of money back then, and still is today, but especially back then. Then how did you navigate some of the lower points?
Just having discussion with each other, that one of the things that we did talk about is we have to be prepared. And that's the reason we kept that money. We didn't change our lifestyles any. And so I think I'm proud of us for doing that. Um, does it mean that we probably passed on some investments that could have really been game changers? Probably. But I kind of think that that's the way, for the most part, that we handled it. We didn't change our lifestyle crazy at all, really. And so we felt like that there would be other opportunities. And the one thing that we always, and we used to talk about this, that as a small entrepreneur, one of the things that breeds success is change, because the big companies can't move that quick. And us little guys, I mean, you got a staff. Our staff ultimately got to about 30 people, but that's not many compared to a corporation of 10,000, where it's hard to make those adjustments because of the buried assets that you already have in the ground, so on and so forth. So anyway, I would suggest that was certainly part of it. And in addition to that, in my case, and probably Chester's too, is I had a strong faith, and that helped. And then, without getting into any detail, a personal situation with raising the kids that was just, I couldn't have asked for anything better, given that the personal, unfortunately, a divorce that went through. And then just, I am so grateful to this day for that aspect, which is beyond anything, as far as I'm concerned, that money and stuff can do for you.
Yeah, that's incredible. So it sounds like faith has just shaped your journey a tremendous amount, and that's something we've talked about extensively. Uh, Very cool. Now, if you could give advice to a 25 or 30-year-old in oil and gas today, and kind of if that 30-year-old is debating between taking really huge swings with startups or pursuing a career track at a super major, what would you tell them?
If you have reasonable confidence in yourself, I can say that there's nothing like it. If you can pull it off, and I recognize that there's a lot that try that it doesn't work out, but I would venture to say that most of the people that have the courage to give it a try are going to do fine if they have to go back to the corporate world. And so that's it. Like I said, that's the way Chester and I looked at it. And the fact that I can look back and think about how much, and I mean this, Chester and I were partners for over 20 years before he decided he was going to the house. And I enjoyed every day. It was, I mean, weekends were fun, but Monday was fun too.
Very cool. And let's see. So you've spent time in Houston. You're from Tulsa. You also retired in Colorado for a little bit before now relocating to Fort Worth, where you have children, grandchildren. And then you also have a son in Pittsburgh. So I feel like you have kind of a little bit of a footprint in every single oil and gas market. Well, not all of them. I don't think you have a connection to New Mexico, but you do have a footprint in a ton of the oil and gas markets. Do you think that all roads are going to continue to lead more and more to Houston and Midland, or do you think oil and gas will kind of spread out to all of those places in the coming decades?
I hesitate to even necessarily um, define it to oil and gas. I think it's energy. And I think that do I think for the foreseeable future, 20 or 30 years, from the standpoint of what we can use to base load, we're going to still be highly dependent on natural gas. There isn't any question. Um, and but I think it's probably inevitable that renewables, just the various things, sequestration, maintenance of facilities, anything that's helping to clean things up that we're already doing. In essence, it's going to kind of help make the sales pitch for continuing to use something like natural gas that's done so many things for so many uh, livelihoods, their way of life, so on and so forth. But kind of as we've discussed in the past, I really do believe that at the forefront, or certainly right in the middle, of quote unquote a transition, if you will, to other sources of cleaner energy, that our existing major companies will be right in the middle of it. And one of the reasons I talk about that is because my son founded his company originally, Trillium Energy Partners, in 19 with two other guys. And they were a midstream company. Brett's background had been a lawyer in New York City, in the energy project financing type thing in the energy space. Then he went to PVR to do business development. I think because he had been raised around me, that led to Regency, which then was acquired by Energy Transfer, and he was vice president of commercial business development for Energy Transfer in the Northeast. All of the people that are a part of what is now called Northern Biogas, they acquired a company, Trillium did, and Northern Biogas had been around for about 20 years and had a name. So they adopted that name, and that's who they're called in. All of those people in that company, outside of the initial Northern Biogas people, are all oil and gas energy people that came from the midstream part of our business, because that experience has proved to be very transferable in dairy waste, landfill, food waste. So because you have to clean it up. And what they're doing is capturing product, methane, that's being naturally vented to the atmosphere, which you can point to, not unlike sequestration, that we're helping to clean things up. And it's a story that's working for them. So to try to limit it to Houston and Midland, I don't necessarily see it like that, because I think the energy business is going to expand.
That makes a lot of sense. It will be fascinating to see where it goes. And, I think a lot of it kind of goes in M&A cycles when companies are buying other companies and consolidating. ExxonMobil has kind of a great example here is 20 years ago, they had significant operations in multiple different cities in the U.S. And, in the previous decade, they have just consolidated everyone from Northern Virginia, from Irving, from Fort Worth. And everyone's going down to the Spring Woodlands campus. And that's not necessarily going to always be the case. And especially when you go into different sources of energy, it certainly does not have to be all confined to Houston and Midland.
Well, just to point to Energy Transfer, Williams, they each have new departments, if you will, that are alternative energy. In other words, they're not going to do anything stupid, but they're keeping their eyes open to the potential of change. And I think that's one thing we can all, if we haven't got our heads buried in the sand, you realize the one thing you can count on is things are going to change. That's just the way everything in life works. So that's why I think they'll be right in the middle of it.
I think that's a great prediction. It'll be fun to watch things unfold. Well, Terry, thank you so much for joining us. The origin of Terry and I's friendship is we are in the same neighborhood in Fort Worth, so met each other on walks. So Terry, I am probably going on a walk here in a couple of hours, so I might see you out
Sure.
in the neighborhood. But thanks so much for joining us. And as always, if you're listening and you have ideas or questions for future episodes, podcast@brownleewealthmanagement.com.